Hello friends, today we are here again with another great company which showed up in our analysis. It is called Bhansali Engineering Polymers Limited. We are going to discuss its financials and the reasons why we chose this company for recommendation. So before we go there, please check out our two new products on indiastockanalysis.com. So we have created two new products in indiastockanalysis.com. One of them gives access to 2 weeks to our 20 weekly best stock recommendations. And another product gives 4 weeks access to our 20 weekly best stock recommendations. So all these stocks have a ISA ratings between 80 and 100. So we also give you 1 year and 3 year targets and also the prices to enter these stocks. Now let's continue. Now, how did we identify this great company? So here we have outlined the process or the procedure that we follow to identify great Indian companies. First, we screen and eliminate companies whose sales are falling, which are loss-making, whose operating and net profit margins are negative, companies that do not pay dividends and which do not generate cash, and those that have excessive debt in their balance sheet. So we've got nothing to do with these companies, so we eliminate them from our analysis. And then for the remaining companies, we assign ratings on several parameters such as sales and growth, the sales growth, the profit growth, the dividend yield, return on equity, debt to equity, earnings yield, return on invested capital, and price to earnings and price to book value. So not only that, we also recommend the top 20 best rated companies on the basis of the ratings that we have assigned to these companies, and we recommend them every week. So with the target price for 1 year and also 3 years. So our recommended maximum price to pay includes a margin of safety of 40%, so that our subscribers do not incur losses on their purchases. And we also aim to earn a minimum of 20% compounded return per annum. So it is like buying a stock quoting at ₹1 for 60 paise per share. Okay, now let's go into the details of this company. So the ticker code is 500052 industry. The company is in specialty chemicals industry. So the current market price is around 160. The company website is given. It is www.bhansaliabs.com. So this company has an overall ISC rating of 94 out of 100. About this company, so it is headquartered in Mumbai, and this company commenced production in 1984. It has its manufacturing facilities in Rajasthan and Madhya Pradesh. Besides, it also has an ongoing 50-50 joint venture with a Japanese company, Nippon A&L. Now, this company is also a leading producer of ABS, acrylonitrile butadiene styrene, and ASA, then also polycarbonate ABS and specialties. Now, recently they have expanded their capacities from 80 kilotons per annum to 137 kilotons per annum in 2018 and 2019. So the effect of the increase in these capacities can be viewed in the sales after 2018 and 19, which have increased substantially, which we will see going forward. Now, where are its products used? Its products are mainly used in automobile industry. So these are mainly used on the making of car doors, lamps, mirrors, and car interiors. And they're also used in the home appliances market, such as in refrigerators, washing machines, vacuum cleaners, and also in electronics and healthcare. So that was a brief about this company. Now, why do we like this company? So here are the reasons why we like this company. The top management of this company have excellent credentials. The promoter, Mr. B.M. Bhansali, was also given Udyog Ratan Award by the Institute of Economic Studies. Now the sales have increased from 530 crore in 2016 to close to 1,290 crore in 2021, registering a compounded annual growth rate of 25% in the last 4 years. Now, increase in sales for 2021 year was around 17% as compared to the sales of 2020. Now, the company has a market share of around 26% in the ABS segment in India. The Make in India initiative and import substitution will help increase this market share for the company going forward. Now, net profits have increased from 34 crore in 2016 to 333 crore in 2021. That is almost a 10 times increase in net profits in the last 4 years. Now, this is also because of capacity expansion that we talked about previously, which was done in 2018-2019, from 80 KTPA to 137 kilotons per annum. And also because of the surge in demand for ABS products due to worldwide disruption in logistics. Now, the net profit margins have increased considerably from 5% in 2016 to almost 25% in 2021. Now, the company has grown its net worth from 127 crore in 2015-16 to 680 crore in 2020-21 at a CAGR, compounded annual growth rate of 40%. It's a completely debt-free company. So this company does not owe any loans, or it has not taken any borrowings, and it also has a cash up to 150 crore cash on its balance sheet. So we like debt-free companies a lot. So it has a very healthy current ratio of 8 as against the normally recommended 2. Also, the promoters hold 56% of the share capital of this company. So these are some of the reasons why we like this company a lot. Now, here are some of the most important financial ratios. You can see that it has an overall ISA rating of 94. That is, it's a super strong company for purchase. The sales growth in the last 5 years has been 20%. The profit growth has been around 83% in the last 5 years. It has an EPS of 20. The operating profit margins are 35% in 2020-21. The company has declared its 2021 results already on the 18th of April this year. The net profit margin is around 26% in 2020-21. The net profit margin for the latest quarter, that is the quarter 4 of 2021, was 34%. It does give out some dividend, but it's not very substantial. So it has been consistently paying dividends in the last 5 years. And the price to earnings is very low at 8, which is good. The average return on equity for the last 5 years has been 40%, and average return on equity for the last 3 years has been at 40, around 39%. The debt to equity is 0, so it's a debt-free company, and it also has a cash on the balance sheet of up to 150 crore. Now let's talk about our targets and our recommendations. So based on this analysis, here are our targets for 1 and 3 years. Now our recommendations aim to earn a return of at least 25% on your investments per annum, without considering the dividends. The maximum price to pay contains a margin of safety of 40%. So we are very cautious before recommending our stocks to investors and the prices to our subscribers and the prices at which they should be entering these stocks. So this has a margin of safety of 40%. That is, a maximum price to pay is designed in such a way that you would be paying only 60 paise for a share that would be quoting at rupee 1 after 1 or 3 years. So that it has sufficient cushion if the things do not turn out the way we expect them to. So based on this, our 1-year target for this company is 203. And our 1-year maximum price to pay for this stock is 130. So similarly, the 3-year target is 530, and the 3-year maximum price to pay is 217. So it appears that this stock can be bought at current levels for a 3-year target. Hope you liked our presentation on that company. So you can check out our products at https://indiastockanalysys.com/shop. You can also subscribe to our YouTube channel and hit like. Join our Facebook group at the given link here. Thank you for listening.